everybody. Welcome to another closing bell. Finally, it's a Friday rather than a Thursday. And as you know, last Thursday I was up in Penang, or last Friday I was up in Penang. The journey going up was okay, but the one that is coming down was the one pretty bad. Coming down for that. So took me a while, but managed to settle in. All right, with that, let's go on with the closing bell. Now, last week when we look at the market, it was at 1776. Then today we are 1771. I said before, last week looking back at my notes there. It's a sideway market, okay, a sideway market with a bias on the downside because we were seeing a lot of corrections, especially with the Singapore side and the Nikkei did corrected, but our market managed to hold up. This is what I mean. I'll just show you on the chart here. Let me just refresh this. So last week you could see this market was really correcting all the market. You can see this is Singapore. Can you all see this? Okay, so Singapore was really correcting, all this way shooting down. Hey, it's like the end of the world for Singapore, but our market was just holding up nice in here. So that's what I'll continue to state, that both the SGX and the KLSE are two different animal altogether. They're two different animal altogether. The way they react to market, as I said before, Singapore tend to be a bit more open to the open water of the regional market, getting the swing from Hang Seng, the AXX, as well as the US market. Whereas for the Malaysian market, we tend to be more close, so we are protected in the sense. We haven't seen any major correction yet, but at this point, we are seeing a one-eye Joe trade. Yeah, this is a one-eye Joe trade, meaning the market might just go up or down. So Joseph, if you come on Monday, that would be very interesting to see this market, how it would do. Okay, we are 1776. Now going to the foreign funds, let me just get my foreign funds here. Right, this is the foreign funds. Today there wasn't anything available from the Sunbiz. For some reason, I'm not able to get it. But I would just like to show you over the last 1 week, it has been a seller for the foreign funds. Has been a seller for the foreign funds. If you add up the 5 day, they are close to selling almost 733 million net selling for the foreign funds. So that's why we're seeing a red dip in here. But on chart wise, they hasn't broke down yet. That simply means that local funds are coming in to support the market, so the market hasn't broke down that much yet, which has been great. So foreign funds are net sellers, and at one point in time, I do believe our market will have to correct, and that's what I'm more on the downside bias than the upside bias for this manner. I'd like to choose back pink here. I do believe at one point this market will sort of break here. And if you did see my June 2013 stock market comment, I did talk about the correction up to 3 to 4%, which is up to about 1750 level, which is this level here. Now notice this is what I talk about, the gap, okay, the window gap, which it should and still staying above, okay, still staying above the window gap at 1750, right? Will test this support at 1750 level. Okay, but it hasn't done yet. As you can see, this market from the so-called Singapore market, it has corrected almost 7 or 8%, which is within our proposition. Market tend to correct, and they do correct 7 or 8%. If they correct 7 or 8%, you could see it will take something like 6 to 8 weeks to recover back, if there's a recovery. So that's what we're hoping for. I don't believe that's the end of the show. There should be some recovery coming in, and let's see if it does it or not. Okay, 8.2% for the SGX market, which is a 8% correction we're seeing in here. Market do react, and they do correct, and finally they do recover, and they will go higher. Okay, so let's make note of that. So we've done the foreign funds. Let's go on to the regional market, which is Singapore in here. Okay, a little bit about Singapore. Let me just erase this since I'm talking about that. You could see this, really, big shakeout here, like what we saw last year in November in here. And you could see the amount that it took is the amount that it will recover back. So the question is whether it will recover in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Now, if this is the bottom, then it will take maybe 3 weeks to recover back. That's probably be middle of July that the market revert back. And the question is, will we see a nice support in here at 3,200 for the STI, which is the Singapore index? There we go. Okay, so that's a support there. Let's switch to a weekly chart and look at it. You can see we have three black bar down, and that was what the worst we have seen since some correction that we have in here. Since then, Singapore has moved higher. Okay, so that's the regional market. Now let's move on to the US Dow Jones. Now last night, and this is what I mean, okay, for the Singapore side, for those of you who don't, why we would see a support here, because this is what we call the GWC, the Great Wall of China, the Great Wall of China. It's supported here at 3,200 level here, and it's holding up nicely. And as such, a lot of the foreign funds, they do look at the 200 moving average as a basis, whether to be bullish or bearish. Now, no doubt, from the old high, the STI, in this case, the Singapore SGX market index, has fallen about 8% from the high, but it is tracking down below the 200 moving average. Although if you listen to some of the talking heads in Bloomberg, they tend to use 20% from the high, which is 3,450 times high. Then you're looking at 2,760 level here, which is way, way down. That's a bear market. Okay, that's to me more likely the market will recover than anything else. Okay, on the Dow Jones side tonight, there'll be some non-farm payroll that will be coming up. You could see